and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we discuss all the important data points that the stock markets are throwing at us. Also, when you talk about the kind of movement that you're seeing in some of the top stocks and sectors at this hour as well. We'll also get you expert views as to what should be investor strategy at this current moment in the stock markets. But first up, the quick moment of the Sensex and the Nifty at this point in time. Although we've slipped to the lowest point of the day, giving up some of these initial gains. Right now, the Nifty is holding up slightly above that flat line at 18,120. Absolutely flat right now. Look at the Sensex. That slipped into the red. So there's a mixed reaction that you're seeing right there. Down by 0.1% at 60,882. Remember, we touched that 61,000 mark right in the opening level. So the Sensex has slipped from those levels as well, down 71 odd points. The Nifty, when you talk about, we'd also seen those levels of 18,217 in the early action as well. And there's been a slippage from that point as well. When you talk about the sectors, though, there's a brighter momentum that you can actually see. So beneath the surface is where all the action is. Looking brighter in today's trading session. Talk about the Nifty Bank, for example. That's up by almost 0.5%. And what's contributing to that is the top most performing index today, the PSU Banking Index, and that is up over 4% odd. So that's where all the action is flourishing in. Also, the metal pack is shining bright with over 1.5% kind of gains right here. The Nifty metal at over 1.2% at 6,402 odd levels is what you can see. The FMCG, auto pack and the financial services, the realty pack are slowly, garnering some gains right here. What's not performing really is, the pharma index that's down in trade about 0.8% odd. Talk about the IT space, that's also slipping away. And the private banks are not doing too well. Complete contrast to what the PSU banks are showing up in today's trading session. The market breadth seems divided between the advances and the declines at this point in time. The top gainers are definitely where all the focus is. Look at the top Nifty 50 gainer. It's post-result reaction for Britannia Industries. And there you can actually see over 9% of a jump being seen. Adani Enterprises, SBI, Tata Steel, BPCL, these are the top gainers at this point in time. On the losing side, you do have stocks like Asian Paints, Cipla, Titan, Sun Pharma and Bajaj Finserv on the downside. Let's welcome our guest to really get a deeper understanding of what to expect in the markets as we move forward from here. Rajesh Palviya joins in from Axis Securities, the expert at technicals and derivatives. Welcome, Rajesh, and thank you so much for taking the time out. Well, help us understand what are you really reading into the market data at this point in time. The benchmarks are still very, very volatile. It's beneath the surface where you're actually seeing most of the action currently. Are we going to face stiffer resistance as markets approach those record high levels? Your thoughts on the markets?
Good afternoon, Sakshi. So, since last 3-4 weeks, we are seeing continuous sustained buying in the market, and Nifty is holding above 18,000 level, which is a positive development on the near term as well as on the short term chart. So, looking at the overall scenario for the market, broad-based buying action has been seen in last couple of weeks, which is clearly suggesting that participant confidence is coming back to the market, and mid cap, small cap space is also performing. Market is giving thumbs up to all positive numbers which are delivered by the company, so which is again showing that market is ready to move further higher from the current level. Also, even if you look at the derivative data perspective, also a lot of put writing has been witnessed at 17,900, 18,000, even 18,100 strike, which clearly suggests that base is shifting higher. If we talk about the Bank Nifty is continuously holding above 41,000 level, and almost it's trading near to its all-time high level. So looking at the overall scenario for both the indices as well as the market breadth and the participation-wise data, it clearly indicates that sooner or later we are poised for higher side breakout for the Nifty, and we may see a new all-time high also in the month of November itself. So
Okay.
volatility is there in terms of index, but still the structure is positive. Buy on depth should be the strategy. One should be a buyer if any correction comes near to 18,000 level. Till we are holding above 17,900, one should be ready to buy any minor dips in the market. And for Bank Nifty, we are again bullish, and we expect that once Bank Nifty manages to close about 41,700, then next target should be for Bank Nifty around 42,500, even 43,000 in the continuation of this uptrend. For Bank Nifty, our stop losses are at around 40,700.
Okay, understood. So we are looking at newer highs on the index level in the month of November itself, although it could be volatile trades going forward from here too. But definitely buy on dips is the strategy that Rajesh really recommends. But let's come a little beneath the surface. I'm talking about the sectors really. You also talked about, why these sectors are showing the momentum. Which sector currently is throwing more promise to you at this point in time, showing up on the technical charts that momentum is here to stay and to build on as well? So which sectors are looking more promising at this hour?
So clearly, banking and financial is one sector where we feel that more upside is likely to come in the near term also. The another sector which is looking very promising, that is metal sector. Since last couple of trading session, we have seen strong buying action at the lower level from all metal stocks. So we feel that a stock like Tata Steel, Jindal Steel, Vedanta, and Hindalco, these all stocks can do well in the near term. So metal stock is also looking attractive. Even
Yeah.
if we look at the capital goods sector, which is also looking very promising,
Hmm.
we have seen breakout on the capital good index, and we feel that stock like ABB, L&T, Siemens can be on radar. These stocks can deliver good upside in the near term basis. Cement is enjoying its upward trajectory, and we feel that some of the momentum is likely to see in the cement space also in the coming trading session. So from cement space, we feel that Ambuja Cement, Ultratech Cement, ACC can be looked at for the buying perspective at the current level also.
Okay, understood that. Now let's talk about the stocks that are in focus today. I'm talking about the stocks that have actually come in focus because of the Q2 numbers as well from the banking space. We've been talking about how the PSU banks are shining brightest in today's trading session with over 4% gains. And what's contributing to this index is two clear stocks, SBI and Bank of Baroda, post the earnings. Stellar set of numbers, quarterly highest profit for State Bank of India. Also, like a very, very sharp jump of 60 odd percent in the net profits for Bank of Baroda as well. Rajesh, help me really understand, what have you garnered from the results and the kind of movement that we've seen on the stocks post that, and what should be investor strategy? If one were to take a pick right after the earnings between these two PSU stocks, where should one go ahead and take that bet?
So both the stocks are very interesting, like SBI as well as Bank of Baroda. Both stock have shown sustained buying action since last couple of months, and the chart structure for both the stocks are positive for near term, short term, as well as for the medium term basis. If I compare both the stocks based on the technical, so SBI is now enjoying all-time high trajectory. Bank of Baroda is still very far from the all-time high. So, but looking at the yearly gains, almost during the year for this calendar year, we have seen Bank of Baroda has shown around 92% gain. If we compare SBI, it has shown almost 33% gain for this calendar year. But looking at the structure, looking at the strength, I suggest that SBI can deliver good up move from the current level also, because it's a a market leader from the sector. Also, we feel that SBI is the stock where for furthermore upside we can see in the near term as
Okay.
well as for the short term also. So one can buy and accumulate SBI also at the current juncture also, as well as if any dips comes, then the 570 is very important level now for the SBI. Till the stock is holding above 570 level, then possibly stock can move further higher towards 690 to 750 level in coming months.
Wow.
So SBI, we are very much bullish at the current level because it has given a long-term chart breakout has been witnessed on the yearly chart as well as on the monthly chart. So after a long consolidation of 8 9 year, now stock has broken out. It's a long-term chart. So we are very much bullish on the SBI, and we feel that this continuity of uptrend is likely to continue for coming months. So one can buy SBI at the current juncture.
Okay, understood. So both the stocks are very, very strong and are showing good momentum. But in case you still have to take a bet between SBI and Bank of Baroda post the stellar Q2 numbers, it's going to be SBI. And what a stellar performance we've seen so far also. Last 1 month, a 15-16% jump. Last 6 months also, it's been a one-way rally, 29% on the upside. Year-to-date levels, we've seen choppiness in between, but still an upward trajectory of 30% odd a move on SBI, and Rajesh really expects, levels of even 700 and beyond being seen on SBI going forward from here. So still, there's a lot of upside that remains on the stock. One more stock, which is from the other index that has been making considerable move also, the FMCG pack. I'm talking about Britannia, another very strong set of numbers that have come about from Britannia, and we've seen a very sharp move on the upside post the earnings, 9 and 10% odd in today's trading session, record high levels for Britannia as well. Help us understand, what do you make of this move going forward? Is there further upside that investors can really tap onto, or is this done for now?
Overall, Britannia structure is positive across all time frame, and stock is forming a series of higher top, higher bottom formation on weekly as well as on the monthly chart, which clearly suggests that stock is in uptrend. Looking at the price action in the near term, stock is now approaching towards its previous swing high level of 4150 level, almost trading around those level. Once stock crosses above 4150, 4160 zone, then possibly stock will continue its upward momentum, and then possibly we can see stock further higher towards 4400 to 4500 in the continuation of this uptrend. So very strong price action breakout is there on the weekly as well as on the daily chart, and we feel that one can remain invested in the Britannia for short term perspective. Even if any volatility gives you opportunity to buy Britannia around 4050, then it's a good level to enter again in the dips. Keep stop loss of 4000 for your long position till stock is holding above 4000 level. Possibly stock can reach towards 4400, 4500 target in the coming months.
Okay, understood. So strong up move can actually be expected going forward from here as well. Upside still remains intact at this point in time. Now let's come to your stock specific recommendations, Rajesh. What are the stocks that you find that actually can give maximum returns to investors looking for positional bets in this kind of a market? Which sectors and stocks are you looking at?
So, Sakshi, first is Ultratech Cement. We are bullish on the cement space, and we feel that further more upside we can witness in the cement space from the current level. Also, most of the stocks are showing good traction. So, from that space, we are going with large cap Ultratech, and we feel that looking at the setup, the stock is now giving a breakout of its multiple resistance zone on the weekly chart at around say 6900, and looking at the breakout, we feel that this momentum is likely to continue towards 7300 to 7400 in the coming week. So Ultratech Cement is buy with stop loss of 6920. Another stock is Bharat Forge. Stock has given very strong run up in the recent past, and looking at the setup, we feel that looking at the derivative data also, we feel that strong long built up has been witnessed in the system, and
Hmm.
now stock is trading above its multiple resistance zone breakout level. So looking at the breakout on weekly as well as on the monthly chart, we feel that Bharat Forge can continue its upward momentum towards 920, 940 in the near term basis. One can buy Bharat Forge with stop loss of 840.
Okay, understood. That's a two stock recommendations from Rajesh today. Ultratech Cement for a target of 7,300, 7,400 odd. Also Bharat Forge for a target of 920 rupees. The stop loss is also shared with you. So those are the stocks that come from Rajesh's recommendation portfolio. Thank you so much, Rajesh, for being with us on the show and discussing all these insights on the markets, and hope you have a great trading day ahead. Thank you very much for tuning in. Well, let's now move to understanding how the markets are trading at this point in time. Still a very volatile trade is what you can really see, and it's a mixed trade on the benchmark. So the Sensex is in the red, the Nifty is holding up into the green, but both very volatile near that flat line. 18,125 for the Nifty at this point in time. The Sensex, if you see, is 60,897. It's not just slipped below that 61,000 mark, but also is trading below that 60,900 mark as well, down about 52 odd points. The question remains that whether in the last 2.5 hours we will see another bounce back or not. Remember, the markets have been slipping away, tracking the US futures. We had seen opening on the sharp up move, and that was on the back of US markets closing in the positive on Friday, the Asian markets giving a positive indication to us as well. But the US futures is where the action has dwindled, and therefore you've been seeing some triggers on the downside, and also the absence of fresh triggers emerging from the Indian markets as well, or the Indian corporate space. The earnings are drawing to a close as well. So you are actually seeing the absence of any fresh triggers that is not pulling up the index very, very sharply. But Rajesh, how he pointed out that November could well be the month where we may actually see some fresh highs on the index level, on the Sensex and the Nifty as well. So we'll have to wait up for that, and I'll keep you updated with how the markets are progressing and what's really the news that's buzzing on the street. And for that, you should stay tuned on to Business Today TV. Thanks a lot for tuning in for now.